Hey investors, welcome back to Channel Name, where we break down the hottest stock market opportunities. Today we're diving into Salesforce, ticker CRM, a blue-chip tech giant that's down 30% this year, but might just be the deal of a lifetime. Their Q1 2026 earnings dropped some serious numbers, and analysts are calling it undervalued with big upside potential. Is now the time to buy? Stick around for the full scoop. Hit that like button and let's get into it. Let's talk numbers. On May 28, 2025, Salesforce released their Q1 fiscal 2026 earnings, and they crushed it. Revenue hit $9.8 billion, up 8% year-over-year, beating analyst expectations. Non-GAAP earnings per share came in at $2.58, also topping forecasts. But the real standout? A non-GAAP operating margin of 32.3%, up from just 4% a few years ago, and a free cash flow margin over 60% for the quarter. This shows Salesforce is not just growing but getting way more efficient. They returned $3.1 billion to shareholders through buybacks and dividends, proving they're serious about rewarding investors. And here's the kicker. They raised their full-year revenue guidance to $41.3 billion, up from $40.50, $40.9 billion. So why are analysts calling Salesforce undervalued? After a 30% drop in 2025, the stock's trading at its highest free cash flow yield, 5.7%, and forward earnings yield, 5.2%, since 2020. That's a bargain compared to peers like Microsoft, Oracle, or Monday, which trade at higher PE multiples. At a forward PE of about 20.7, Salesforce is cheaper than the tech sector's average of 28.2. Morningstar gives it a 4-star rating with a fair value estimate of $325 per share, implying a 7x enterprise value sales multiple for 2026. That's a potential 30 to 50% upside from its current price around $242. Posts on X echo this sentiment, with some calling it the cheapest valuation ever, at an EV/FCF of 17.6x. But it's not just about numbers. Salesforce dominates the CRM market, and their focus on profitability plus growth makes it a rare gem. They're forecasting 8% revenue CAGR through 2030, driven by their cloud offerings, especially Data Cloud. Here's where it gets exciting. AI. Salesforce's Agentforce, their AI virtual agent platform, is a game changer. It's already racked up 4,000 paid deals and $100 million in annual recurring revenue in just 2 quarters. Data Cloud, paired with AI, is over $1 billion in ARR, growing 120% year-over-year. Nearly 60% of their top 100 deals in Q1 included Data Cloud and AI components. Then there's the $8 billion Informatica acquisition, announced just before Q1 earnings. CEO Mark Benioff calls it transformational, adding AI-powered data management tools to Salesforce's platform. Unlike past acquisitions like Slack or Tableau, this one's accretive, no dilution, no change to their capital strategy. It's set to close in early fiscal 2027, boosting their AI and data capabilities. No stock is risk-free. Salesforce faces challenges like slowing enterprise spending, which led to just 7.7% revenue growth in Q1, a dip from their double-digit days. Economic uncertainty could hit CRM budgets, and the Informatica integration needs to go smoothly. Plus, if the AI hype doesn't deliver, valuations could take a hit. But here's why it's a buy. Salesforce's predictable revenue stream, strong cash flows, and leadership in AI-driven CRM make it a blue-chip stock at a discount. Analysts like Oppenheimer and Deutsche Bank are bullish, with price targets up to $400. Cantor Fitzgerald's overweight rating and $325 target highlight the earnings beat and AI momentum. With a wide economic moat from switching costs and a network effect, Salesforce is built to last. Salesforce is a high-quality stock trading at a rare discount, backed by strong Q1 2026 earnings, AI growth, and a smart acquisition strategy. It's not without risks, but the upside potential is hard to ignore. What do you think? Time to buy CRM, or are you waiting for a bigger dip? Drop your thoughts in the comments. If you enjoyed this breakdown, smash that like button, subscribe for more stock analysis, and check out our video on top AI stocks for 2025. Thanks for watching, and we'll see you in the next one.